Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, we're looking at the Bitstamp chart. I'm on the 4-hour Bitcoin on Sunday, and it's about 4 p.m. EST. And as you can see in the previous video, we were talking about this broadening wedge right here, and essentially like the right angle and probability of breaking to the upside was 34%, and a break to the upside is extremely reliable. You'll see that as soon as we closed above this either green or purple line right here, we got the continuation move, took out the measured move, and then got this candle right here, which is essentially like a shooting star or indecision candle, basically at the top of a breakout, signaling that the trend was running out of strength. We then proceeded to put in 2 red histograms on the TD MACD, and we did get our sell signal at the top of the range as well, followed by the flip of the slope, and now we're getting ready to exit the bullish control zone. We were able to flip the slope back over blue right here, basically symbolizing that we were in an uptrend, a strong trending trade to the upside, but it looks like now we're getting our pullback down here. So if we zoom into a shorter time frame, just going into the 1 hour briefly here, you'll see that we are essentially putting in like this slanted top right here, and then a flat bottom right here, and the measured move breakout. If we break out to the bottom, will bring us back down to that purple line or green line, roughly in that area here. Just a retest of the breakout basically, and just looking for a bullish consolidation, allow the oscillator indicators to reset on the shorter time frames, and then potential continuation back to the upside. Now if we go to a longer time frame, actually while we're on the short time frames, what we're paying attention to here real quick, I'm going to turn off some of the drawing tools. We're paying attention to the 8 and 21 cross. We are getting ready to have that dump down here. In the event that we do close below this in the next like 20 minutes or so, that's going to drag these down, and our measure move will line up here with that 26,000 range in the same way as it would line up with the 821 cross. The 89 would be at 25,377, and the 200 EMA SMA is at 24,110. We need to pay attention to that area as well, that $23,500, $24,000 range, because we did have futures close right down around that area as well. Now it is possible once again that we got a breakaway gap and continuation to the upside, but more likely than not, we would come down here at some point in time and fill that gap. Could be today, could be in a month. But statistically, the majority of gaps do get filled, whether you like it or not, and want to say that price will never go down again. Will go down again. That's just how markets work. They breathe in and go up. They breathe out and go down. So we're just watching, keeping our thumb on the pulse of the market, so to speak, or finger on the pulse of the market. And if you look at the 4-hour, little longer time frame, we are consolidating right at that 8 right now. We did take out the parabolic SAR, and any continuation below this area is going to take us down to the 21, which again is going to line up at that 25.7 range, or the green 50-55 down at that $24,000 range. And you'll notice that as we switch these over to the different time frames, that the different colored moving averages on that time frame will line up with the other ones. If you're not using the Fibonacci moving averages, if you're not using the TJD prophecy or parabolic SAR with binary pivots, I highly recommend it. Basically allows you to look at different time frames and have your moving averages sit in line instead of just looking at basic moving averages that people see. You'll notice that on the pullback right here, we exactly hit the moving average. We're literally getting picked up by the exact moving average right here. You'll notice when we sell off on longer time frames, shorter time frames, all different time frames, we come down exactly to the moving average points. They're not just like rough estimates. There's a reason that I use the Fibonacci numbers, Fibonacci retracements, and Fibonacci moving averages. And same thing again here. We are flipping back over the TJD TD MACD, losing that blue slope slowly and selling off. So essentially, right now we're looking for a pullback as low as 20,400. Essentially back to retest that breakdown area. But it is very likely actually that we would get continuation to the upside, although this daily candle is looking extremely bearish right now, basically looking like a topping candle. You get the powerful push to the upside. There's no attempt to save price action, no follow through with it, and then it just sells off completely, and you get like that long wick on top and a very small body. Potentially looking like we're topping out the trend, but it's a little early to look. You don't want to jump ahead on these things. Market can stay irrationally bullish much longer than you can stay solvent. So you don't want to keep trying to short every single top because you will get wrecked, obviously. But in the longer term moving averages, we could have moves back down to 14,000 would be our 200. 13,000 would be our 200 SMA, and then as low as like 11,000 is our 528. So it does seem unrealistic at this point in time, but only because we've had so much bullish exuberance or bullish irrational movements, that it seems like we can never pull back. But eventually buying pressure does get exhausted and you have healthy retracements. It's also very likely that we would get a retracement back down to the 21 on the weekly, as that is typically let's switch back over to that real quick while I'm talking about it. 21 on the weekly is typically what holds us up. That's that yellow moving average right there. You'll notice we get saved by the yellow here, saved by the yellow here. Here we get saved on closes by the yellow, but we come all the way down to the 55, the bright green, saved by the yellow, saved by the yellow, saved by the yellow, saved by the yellow. And you'll notice that also every time we get one of those sell-offs, we get a hard sell. We get a hard sell and leave the bullish control zone. Hard sell, leave the bullish control zone. Hard sell, leave the bullish control zone. Hard sell, leave the bullish control zone. And then, of course, obviously, hard sell, leave the bullish control zone. And if we look at, the typical pullback from one of those hard sells, that is a 40% pullback. If we look at one of these ones over, let's try this one here, that is a 38% pullback. If we look at the next one right here, that is a 38% pullback. And then if we look at, obviously, the top one right here, just the initial pullback from the peak there was 70%. So, we're looking at essentially like a 38 to 40% pullback on average back down to that 2021, 21 EMA. So, at this point in time, say this was the all-time high, back down to that. That's 42% pullback. It takes time to happen, so that would line up perfectly, with essentially a 40% pullback back down to the parabolic SAR, potentially find support and get continuation. Keep this in a bullish uptrend. Also is going to line up with the previous top right here as well. So it's not unlikely that we would see that in the near future. So do not get irrationally bullish. That's why I've been telling people, if you're not already in the markets, if you're not already positioned for this move, it's not financial advice. I'm not your financial advisor, but it's never too late to just wait for the next pullback if all of a sudden you're bullish, and then you can get into the position you desire. So and you'll notice here in orange we take from the all-time high to the sell-off low down here at 3,000, and then if you notice here in yellow we take the 14,000 peak and go down to the low down here at 4,000. You will notice that the Fibonacci extension that we are currently at is a 1.5 on the yellow, but you'll notice here the 1.618 in yellow and the 1.236 in orange. So the high from here plus 24%, basically 23.6%, takes us up exactly to 30,400 basically. So 30,400 is a 125% move basically to the upside from the previous high right here, and then from the top right here to the bottom, that is a 1.618, so a 162% basically move, which again, those are Fibonacci retracements, basically our targets into the future. So once you're in a blue sky breakout and you've taken out the all-time high, there are limited ways to identify specific targets. And if you look at the stock market, if you look at crypto, if you look at basically any asset class ever, it's going to line up with fib extensions, and that's why they are so important. So that's what I'm paying attention to, is moving averages and fib extensions. Nothing changes in the way we do technical analysis. As the price action breaks to the upside, we just look for specific things to allow us to be bullish in these markets. So, and if we zoom back down to the 1 hour time frame and just look at the drawing tools that we have in place, we're essentially putting in that descending triangle here, angle top, flat bottom, selling back off to the previous breakout point, key Fibonacci retracement level, and then we're paying attention to how these specific targets come into play. The breakdown from this area going to take us back down to that 25.4 range, and anywhere along the way we can find a moving average and potentially expect a target. And as you'll see, we were talking about that in the beginning of the video, and it's already playing out. we are now about to get that cross to the downside. We're about to hit that target of 26,000, and then at that point in time, we're just going to look for our next target down here. We're just going to keep paying attention, look at what the measured move is, look for our next target, essentially get down here to the 89. 89 is going to be confluent with that previous tops from back here that we were looking at. That was our closes on longer time frames, and then we just pay attention and see how that keeps playing out. And as we hit those targets, we just look for our next target as well. And you'll notice on the 1 hour that we are flipping the slope back over on the TJD, TD MACD to red. Now what we want to pay attention to is, do we start getting moves that look more like a change in trend and less like a bullish consolidation or a bullish reset of our indicator oscillators? Because we were getting to the point where there's basically nothing left. There's no fuel left in the tank to continue moving to the upside. We're hitting our measure moves. The indicator oscillators are topping out, so there's no one left to buy. So eventually we get a little pullback, clear out some of the indicators, let the oscillators reset, fall back down to lower levels, and then we can potentially get moves to the upside. I mean, the RSI was up here at 81% on the 4 hour, which is pretty high, but the stochastics were at like 94%. So it's not unrealistic to think we could get these negative crosses, come back down, consolidate around like this. We would expect us to consolidate above the 50 line or above the 40 line, somewhere around there, find support essentially at that halfway point, and then get continuation to the upside. We can look for trend lines in these indicator oscillators for areas that these might reset or might get like continuation from, etc. So that's what we're paying attention to. Just the same old way that we always do TA. Nothing should change as the price action breaks to the upside, except for our overall outlook on the market. And as we have now confirmed that this is an overall bull trend, a bull run, and that we are overall bullish on Bitcoin 100% based on every single one of our trading plan, indicators, oscillators, price action, everything. What we're looking to do is buy the dips as it pulls back, and we are expecting somewhere around a 35 to 40% pullback at some point in time when this trend tops out, at which point in time we will have the best position to accumulate based on our indicators, oscillators, and price action overall. So, again, if you weren't already positioned for this, if you're just new to crypto or Bitcoin, the best thing to do is wait for a big pullback and then get into the markets. But you don't want to try and just call the bottoms, in my opinion. You want to look for key areas like previous areas of support, come back down and retest. So, it's very likely that somewhere around that 24,000 range, somewhere around the moving averages, somewhere around the CME close, that we would find that support. But we do want to be very careful, because obviously, you don't want to get stuck in a situation where you go to buy the pullback right here. We, break straight through it, and then we go into a extended period, basically like consolidation or, I mean, if you bought at the top of 2017 right here and got stuck in the market to the bottom till February 2019, especially if you're new to the market, that is absolutely horrendous and a rough situation to be in. Followed by, essentially a nice little bull run, you get bullish again, and then fails and comes all the way back down again, and then you finally get the breakout. That's a 3-year period over time before we got out of that area. But, obviously if you hold strong, that's fine if you're a hodler. But along the way, it's tough to be in a situation like that, especially if you need that liquidity or solvency, if you need that money for something else. So make sure that you are taking care of high interest debts in this situation. That's what I think people should do without being, financial advice. Obviously, I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Be careful of the altcoins and, fundamentals. Try to focus on technicals and, try to keep your mind on, basically on the prize. And what's important here is obviously Bitcoin. We have our, just looking at a daily time frame on the Bitcoin dominance. We basically topped out here at that same previous area of Bitcoin dominance, up in that 70 range. And, the previous all-time high here on this run itself was like 72. So we would expect to run into some resistance there. But we are fast approaching like that 90% range, saying that essentially altcoins are dying and people are realizing that, Bitcoin is the king. And then this is a very important chart. I never see anybody looking at this, or when they do, they look at it briefly and, don't pay much attention to what's actually going on here. But here we have the weekly crypto total market cap, and you'll notice the total market cap back here from 2017, 2018, all-time high is exactly where we're at right now. So we broke through the previous close right here, all-time high on the monthly. In this area, consolidated, and then got the burst back up, and now we are essentially like double topping at the all-time high. So what does that tell you? It tells you that at this point we have reached the maximum amount of money or value that we have ever had in this asset class before. So with all the gains, all the losses, with the way that total crypto market cap is calculated by taking the last price that any crypto was sold at and then extrapolating that by the total supply, we now have the exact same amount as we had in the market at the previous all-time high. So keep in mind that with all that extra institutional money that's come in, all those groups that have put in like hundreds of millions or billions of dollars, we are just now equaling the speculative all-time high that we previously had in 2017. So they say the 2017 market top was essentially a consumer-driven rally, and they're saying this one is basically a institutional-driven rally. So if we get the combination of the consumers, or the just regular people, and we get the combination of the institutions, or quote unquote smart money, if we get both those in here at the same time, that's when we can really extrapolate this and essentially see like our $1 trillion market cap achieved. We are currently at the all-time high we topped out at right here was $754 billion. So we are very close to getting to that $1 trillion market cap. In relation, I know people think they're late to the game and they should have bought and they heard about this and that and the other. $1 trillion is nothing in the overall scope of things. U.S. printed somewhere between like $5 and $7 trillion this year. So, based on the entire world and the entire monetary supply and, the total market cap of gold or the stock market or real estate or bonds, this is nothing. So you're still very, very early to the party. If you're watching this video, if you're paying attention, you are ahead of the game. I do want to talk about one more thing, though. Again, on the weekly, we'll notice that when we got these hard sell signals, that was typically where we ran into our tops, at least temporary tops. And then, obviously when we exit the bullish control zone and got that hard sell finally, and the histogram switched over to multiple reds in a row, we did get our all-time top. You'll notice here also we got 3 in a row and then multiple histograms and sold off from this area. That was our top at 14,000. And here we are once again. That previous little top that we got at, total market cap at 374,000. Same thing, flipped over multiple histograms. That was our top temporarily. And then here we are once again, getting the hard sell. We are at a key resistance point and, potentially going to top out total market cap as well. What does that mean? It means Bitcoin dominance could sell off here a little bit, and we could see some of that money flow back into altcoins and, essentially consolidate with Bitcoin or sell off slightly with Bitcoin, and then see some of these low cap, shit coins basically like go on parabolic rallies the same way that we did at the end of 2017, followed by a couple day, couple week, couple month, couple year consolidation pattern, and then break out to the upside. So once again, we're paying attention to that. Keeping our eye on the prize here, and what is important, don't get overly bullish or overly exuberant. Pay attention to what's going on multiple time frames, especially longer time frames. I like to tell people overall look at the longest time frames first. Get the overall big picture of what's happening. What's happening right now, we are potentially topping out. We have not gotten a daily candle like this anywhere along this entire rally to show us that we're potentially topping out. So this is a very bearish candle. We still have 3 hours until it closes, so a lot can happen in that time frame, but make sure we pay attention to that. And then obviously on the shorter time frames, you can zoom in and kind of get a micro look at what's happening, and get yourself potentially positioned as you start to see moving averages crossing to the downside. But you will notice with the various Fibonacci moving averages that we use, they're going to tell you the same thing on shorter time frames as they do on longer time frames, but the moving averages are going to just line up but be a different color. And that's the reason, once again, that we use these. If you're not using these indicator oscillators, I encourage you to, if you have not already, make a free TradingView account or buy a TradingView account and go on there and search out in the description of this video. All the indicator oscillators I've designed are available for you. You can go ahead and get to use those tools, start practicing charting, and get yourself familiar with this. If you're already doing all this, you should be going through and fine-tuning. You can add in the lines, the drawing tools, all the different stuff that I use on my charts, and start to do it on your own. Or you could do your charts and then watch my videos and check it. But I do also have the Bitcoin chart, my chart specifically, available as well for free. Once again in the comments. So if you like this video, if you like my content, please give us a like, follow, subscribe, all that good garbage, and I appreciate it if you would go ahead and leave a comment, as it does help out with the YouTube algorithm, and obviously trying to grow this channel and provide as good of free content as possible. So there you have it, guys. Crypto Trend Trader, and I'm out of here.